Hi, my name's Kirsten. I'm a CPA and accounting instructor, and today we're going to talk about why do we have financial accounting, what is financial accounting, and what is the whole point of it. So imagine you own your own business. Let's say that you want to open up your own bookstore. You buy new books and you resell them. You buy used books and you resell them. You have events in your bookstore. Maybe you have author signings. You have to pay for your storefront. You have to pay fees to manage your online storefront. You have rent. You have a ton of other expenses that go on in the business. So let's just think about what might happen in a day. Maybe you buy some new books. They go on your bookshelves. Maybe you sell some books to customers. You get a utility bill in the mail. Now, these are just 3 examples of transactions that happen in one day of business. Now, imagine you're a large-scale company. You're going to have thousands, maybe millions of transactions that occur. So how do we summarize that information? Well, in the business world, what we do is this language of business. That's what we call accounting. So we came up with this framework of financial accounting to summarize all the transactions that happen at your business. But Kirsten, why can't we just write them all down in a notebook? Why do we have to make this so complicated? Well, we have to have some kind of formalized language to make sure that we have a system in place so things don't fall through the cracks. That's where accounting comes in. That's where this record keeping and documenting, that's where all of these systems come in to make sure that we have a good record of our business, to make sure that we have a way to maintain these records and communicate that information to people who might want it. Now, who might want this information? Well, if we think in a very broad sense, when you and I might look to invest in a company, we might want to take a look at their financial statements. We might want to see things like, are they operating at a loss? Are they operating with income? Maybe how much overhead do they have? All of these things are things that we, as external investors, or the public might be interested in when we are looking at potentially investing in a company. Now, banks might want this information if they're thinking about potentially loaning a significant amount of money. They want to know how risky is it to loan money to this business. Maybe you're searching for a job. You might be interested in how well that business is doing to make sure that if you get the job, the business is still going to be around in a couple years. There's a lot of people that care about the information in financial statements for many different reasons. Now, when we talk about accounting, there are 2 primary functions. Those primary functions are 1, to measure business activities and record business activities, but 2, to also communicate all of those activities to those external users or maybe even internal users of the financial statements. So we're measuring and record keeping, and then we're also communicating that information. Now, there are 2 types of accounting. There's financial accounting and then there's managerial accounting. Now, right now, I'm going to focus on financial accounting because that's typically what we think about when we think about accounting. Financial accounting is taking all of these transactions at a business, summarizing them in your financial statements, and then communicating that information to external parties. Managerial accounting is a little bit different. It has some different rules and some different standards, but that's taking accounting information to make better management and business decisions. So that one's really only used internally. Now, why the heck do we need a language in the first place? Again, why can't we just write all these transactions down on a list and just give them to somebody else? Why can't we just summarize them? Just put them in an Excel file, it'll be fine. Well, we do have some rules in place because in general, we want to standardize the language. You and I, if you're watching this video, you speak English. Maybe you don't speak English, but maybe my video is being translated into another language. It's important to have languages because these things mean something. These words mean something. So when we talk about accounting, revenue has a very specific definition. Expenses have a specific definition. Current assets, long-term assets, all of these different terms have specific definitions, and we need some kind of standardization to make sure that businesses are operating in this same language. So if you, an external user of financial statements, were to compare one balance sheet to another, you're really going to see a lot of the same terminology, and you're going to be able to kind of compare apples to apples. When they say that they have current assets and this other business says they have current assets, we know what that means. So we can actually compare the businesses to one another. There are a lot of different perceptions about accounting out there. A lot of people think of your stereotypical pencil pushers, your nerds in the back offices doing their Excel workbooks, or maybe you just think of tax when you think of accounting. That's a very common perception. But in reality, there's a lot of these decisions that go into accounting and what numbers get presented on the financial statements. I always say you got to have good data in to have good data out. So we have to have good data in, we have to have a good accounting system in order to come up with this good summary of financial information to make better business decisions. Now, a couple key things you should also consider when you're talking about financial accounting. The Securities and Exchange Commission, the SEC, they're the one that requires publicly traded companies to have audited financial statements. And there's a lot of rules in place that we have to follow in those financial statements. Now, FASB, or the Financial Accounting Standards Board, is another key player when it comes to financial accounting. FASB is the one who sets the rules that we follow. They set our accounting standards, otherwise known as Generally Accepted Accounting Principles, or GAAP. So if you ever hear me refer to the term GAAP, what I am saying is this is the rule book for all of these financial statements to follow. The financial statements are prepared in accordance with GAAP. They're prepared in accordance with this rule book that is set by FASB. FASB sits under the Securities and Exchange Commission. The Securities and Exchange Commission also requires that these financial statements be audited by auditors. So there are 4 in the big 4 that you'll commonly hear talked about. Those are KPMG, EY, Deloitte, and PwC. There used to be more, but those are the big 4 that we hear about, and they're the ones that really audit those big key players. When we think of the big companies like the Googles and the Apples, those are typically audited by a big 4 accounting firm. So that's why we have financial accounting. That's why it's important that we have a language. Those are the rules that we follow. Stay tuned, and I will be talking about our financial statements and some other rules in accounting. See you soon.